Welcome to the weekly forecast. This is weekly forecast for the second week of the Iran war. So this is the second week since the Iran war began, and let's get into the market. So this is the chart we have as the economic calendar for the week. So Monday, Tuesday, Wednesday, Thursday, Friday, packing a whole lot of high impact and medium impact news. This is CPI week. So Monday, Tuesday, lower probability. Wednesday, after the CPI, good setups begin to form. So this is geared towards Thursday. This forecast is geared towards Thursday's trading, and I'm going to look at the top-down analysis. But before that, I'm going to look at seasonal tendencies. So seasonally, the dollar at this time of the year is to be topping, but you can expect a rally and a decline during this time of year. The nasdaq is expected to be gradually moving higher, but actually nasdaq is expected to consolidate. So it's not a straight move up. Nasdaq during March usually consolidates, so keep that in mind. Now the bonds and bond yields. So 10-year bond or 10-year T-note is expected during this time of year to be sloping down, trending down, and the yields, 10-year yields, are expected to be trending up. These seasonals actually tend to be true at the moment, and I'll show you that in the next slide. So you could see the yields. So yields are bullish. You can see March is rallying up. I see it drawing up to this buy side liquidity pool 40, that's 4.311%. so yields are bullish. I anticipate a rally that sweeps these relative equal highs on yields. That's very much in line with the seasonal tendencies. So for the 10-year T-note, the 10-year T-note is bearish. You can see the decline moving towards these lows is already invalidating OTE. It has taken this short-term low. I want to see it move lower. That's my expectations for bearish yields. So the T-note is bearish, working towards the relative equal lows and is closing below T levels, confirming even more that it is bearish. Now interest rates, we saw this commentary saying the dollar, since swaps are discounting odds at 4% for a minus 25 basis point rate cut in the next policy meeting 17 March. So this is actually saying 4%, meaning the probabilities are very low. So I'm looking at it as hawkish. Interest rates are hawkish, and I'll tell you what that means in a second. But understand that commodities are more bullish than bearish. So soybeans is rallying quickly, live cattle strong in December, then it began to consolidate from January till now. So it's an uptrend that has become a consolidation, and crude oil has been crazy. It's a massive rally as a result of the Iran war, and a high-grade copper is stuck in consolidation since January, also after a December rally. So it was strong in December, and now it's in a consolidation. Now I'm looking at the highest probability for high and low of the week to form. Currently, the high of the week is on a Wednesday. That's the second highest chance. So it's really probable that the high of the week has formed, because the high of the week is very possible to form on a Wednesday. Next up, I'm showing you, this is my expectation. I want to see a consolidation, then a manipulation, bullish, and then a bearish distribution. This is actually what I outlined at the start of the week, and that's what I'm looking for in price action going into this week. So going into this Thursday's price action, I'm leaning towards the bearish side. Fundamentally speaking, before getting to the technical analysis, I'm bearish fundamentally because of the reasons we just saw. So I'm going to break down what I just explained. You're going to understand what I mean by interest rates, how interest rates are affecting the markets, how the yields going bullish this time of year is affecting the dollar, and what that means for stocks. So conclusively, yields are bullish. You saw the yield chart, they are bullish. I'll just return to yields. So you see yields being bullish, and this agrees with the fact that commodities are strong. I just explained soybeans, hybrid copper, crude oil, and the rest. So they're generally strong. When yields are bullish, commodities are usually strong, and bonds are usually bearish. So we saw bonds being bearish. Look at the T note falling lower. Therefore, currencies are going to chase yields. So currencies will chase these yields. That means the dollar is going to rally as a result of yields rallying. You have a lag time between the dollar rally and the yields rally, but it's coming. So you're bullish on the dollar. I'm bullish on the dollar, rather, because they're going to chase, dollar is going to chase yields. Therefore, opposing pairs like Euro USD, GB USD, which are counter higher time frame, are going to be bearish. Stocks are going to be bearish because when the dollar is bullish, stocks are bearish. So since currencies will chase yields, the dollar is going to rally. Bonds are leading indicator to stocks. So since bonds are bearish, stocks will follow the bearish move subsequently. So again, dollar bullish, stock bearish, foreign currencies bearish. That's how I'm attacking this week. Now, for this section of the forecast, this is the Nasdaq chart. This is Nasdaq 1 week chart. So this corresponding encroachment of this discount week. So on the weekly chart, discount week corresponding encroachment. Dollar finally closed below it last week, and we see this week open here, rally to the high, but could not take out the high. So that's underlying weakness, and then it traded down, posted this low. We're trading here now at the middle. The candle is almost indecisive, and that's instead for going to the daily chart. So on the daily chart, we see a couple of buy stops resting here, but then we see intraday an old Asian high that's been raided, and price has rejected a liquidity pool and is looking to trade lower. I've traded below previous days lows of the past 2 days, which were very small ranges. So this looks like a swing high, and this is candle 4 of the swing high, continue lower. So the focal point is going to be this array, which is going to be the grading of that candle. The candle that's of liquidity, that candle has a large range. That's Monday's candle. So I'm going to run quadrants on that level. I'll call it Friday. But for now, this is what we're looking for. Monday consequent encroachment. Also looking for on the sell side, and we'll look at other factors on the lower time frame. So on the 4-hour chart, I'll be looking for arrays, PD arrays that support these ideas. Now I see that this BC has been inverted, so I'm drawing out this 4-hour BC. It has been inverted, price has closed below it, and it seems to have been retested to the low of that array. So that I expect that point to be sensitive if we get to it, the lower portion of that array. Also, I can see price and balance and efficiency just below. I'll align that with horizontal line. So that inefficiency can be a draw. The new week opening gap is right here as well. The dealing range from low to high, we're clearly trading the premium, so we're looking for discount of the range, and discount objectives are 24,608.75. Consequent encroachment of Monday's range 24,526.75, and these suspiciously equal lows, these two candle lows. So I'm still looking for low hanging fruit at 24,449.25, 24,410 even. Alright, so from there I'm going to drop down into a 15-minute chart to look at the order flow and the arrays for this session.